Hey there, it's Michael Movitz with Brandjectory. It's been really an incredible week of trade shows and activities for our founders. There was the UNFI show, Fancy Food Show, NOSH, BevNet, KeHE, all converging in the matter of about 10 days. And so it's been really quite a whirlwind. But I've had a chance to talk with a number of investors and a number of founders. There is no question that the current market conditions with inflation rate being what it is, the interest rates going up, supply chain issues still dogging us, and the current economic environment just providing a tremendous amount of uncertainty. I got to get out of the way of this bus. It means that early stage investors are holding back. Most angel investors use the stock market to house their assets while they are not investing. And the market has seen some incredible declines. The uncertainty in the market resulting in investors slowing their investments or holding back on investments means that there might be less capital available to founders, especially early stage companies. So that means that it's important to conserve cash. Give yourself as much runway as possible, as much of a cushion, as much protection as you can. Nobody can predict when or how it's going to improve. And so angel investors in particular are becoming much more cautious. Even later stage investors are becoming much more cautious. I would liken this to being very similar, but not exactly like April of 2020, when we were crashing into the pandemic and nobody knew what to expect. And so there was a lot of uncertainty, and investors were getting focused on, I'm in traffic in Chicago. Investors were getting focused on supporting their portfolio companies and not ready to make any new investments to make sure that their current investments survive the pandemic. And so right now you have a similar situation where investors are becoming much more cautious. They're much more focused on the bottom line. And so it is really important for brands to make sure that they are showing a path to profitability. That it's not just about top line growth at this point. It's about reasonable assumptions. It's about how you are going to adapt to the consumer behavior changes, channel changes, and most importantly, how the current economic environment is going to impact your business. Nobody has a crystal ball, but what that means is that with uncertainty, it's time to conserve cash. And so conserving cash means reviewing your expenses. You're not already doing this, at least a monthly, if not a weekly cash flow review, making sure that you've got the cash reserves in place to hold you through sustainably for many months. We don't know how long this is going to last. At the end of the day, what wins the game is a differentiated product, strong business fundamentals, growth opportunity and market opportunity, and the team itself. These are always in season, but they are even more so important during uncertain economic times and marketplace times like we have right now. You might want to think about trimming or eliminating unnecessary expenses, or trying to reprioritize what your expenses are to make sure that you've got the cash to sustain yourself through some of the longer periods where investors may not be investing. Of course, there's always debt financing and asset-based lending, but those requirements are becoming a bit more stringent as well. So to get through the current period, it's going to take a little bit more work and a little bit more attention to detail. If you'd like to talk more, write me at michael@brandjectory.com.